Hello, everyone. My name is Igor Tomic, and I'm really pleased to see you on our episode of the Fintech Garden podcast. And it's already the fall time of 2025. And today I would like to welcome Dimitro, who is my co-host, to discuss a really hot topic, the pulse of the fintechs in this year. So hello, Dimitro. How are you?
Hello, Igor. Nice to see you again. Welcome to all of our audience to our podcast. And the topic that we will discuss today is a very specific one. We tried to make quite a big research and analysis what happened in the last years, what happened in 2025, and to see where the trends goes, because we have with Igor an impression that we are right now just at the border of starting a new era in fintech, not based on technology, not based on the approaches, but also like the style of management, frameworks, licenses and regulations. We were tackling with these topics for the last, I think, 2 months in our weekly harvest reviews and in our podcast topics. And now we decided that time came to discuss about this in details.
So everyone is sliding into the business season, and I think the last 4 months of this year will show the trends. And we faced really interesting stuff in the first months of the year. The summer was kind of quiet and not a big news there. Regulators were introducing some stuff, certain rumors were going on, and I think this episode should be more about the numbers. And the really first one is the secondary sale of Revolut, which is for the secondary sale is estimated for $75 billion. And is it defining that we see a new era in valuation and how they're going to proceed with the IPO, or what actually are we facing?
We discussed this several times in our weekly harvest, and we touched the topic that currently the money goes mostly to the product that proved themselves as a reliable product, as a reliable company. And this is what basically is happening. We see this, it's happening with Revolut, it's happening with Stripe, it's happening with N26, with Klarna also. The difference is that Revolut proved itself as they went far away. They're like Stripe, but European-sized Stripe. They went so far away from Monzo and N26 and Klarna that right now they're a little bit it's impossible to get to them and to get to their results. We see a very big profitability push in Revolut. We see that Revolut has less issues with regulations and less issues with compliance as its competitors, which give Revolut the possibility to go ahead and to attract much more money. Because the investors, we discussed this with the topic of Klarna in one of our weekly harvest review, that investors right now are searching for reliable products that prove themselves as a good product the market needs, and a product where people can trust. People, I mean like simple users. Revolut they have a banking license, which is one side, so it gives a trustability. But also people started to bring much more money to Revolut. The turnovers are bigger. Plus Revolut has a global expansion in the United States, in Latin America, in Asia, where they are planning to do this. This is why investors trust Revolut. This is why they are going to Revolut.
Okay, and let's zoom out for a minute for like high-level numbers. According to KPMG report in Global State of the Fintechs, in first headquarter of this year, actually it was recorded funding for $44.7 billion, with the total amount of deals around 200 deals. I think that gives us an ability to say that in fintechs and overall in financial institution, we kind of see 3 phases. So we in 2025, and fairly we can split the events, the global digitalization in banking and in financial services, like 3 phases. Starting maybe from 2012, 2014, the era of neobanks rising. The first neobanks are getting the license. They fill in the water and they understanding that they can chase after the banks who are not up to the speed with the mobile engineering, not up to the speed with the serving the clients out of the branches. It was until 2020 before the COVID hit it. So a lot of money poured from VCs into the digital space to get more clients and extend new business models, which were not possible before the full digitalization. And after that, the COVID hit. A lot of VCs were really considerate for giving the money into the models or even the pre-seed rounds to the companies who were easily getting money before. And then the third phase, I think, is with the global tension globally, because United States are no longer saying that they would like to be a global player on the global level. It shows all the tension which is happening with the Asia countries, European Union, United States. So even with the war of Russia in Ukraine is actually showing this, that the world is not like it used to be before the COVID. So we have 3 periods: before the COVID, COVID times, and post-COVID. And what we can tell is this period post-COVID is ending. Are we facing any trends in this market?
Before answering to this question, maybe we can make a little bit of analysis of what happened with Revolut and other products, similar products, their competitors on the market. For example, when the post-COVID period started. In my mind, post-COVID period started somewhere in 21, and post-COVID, of course, period has two periods itself, before the war and after the war. If to take a look on Revolut and N26, for example, they were maybe not at very close, similar positions, but they were grosso modo at very similar starting situations after COVID started to be taken off. Why do you, in your opinion, why do you think these two companies move differently? We can take also the example of Monzo also. Why the Revolut achieved results that they have right now, and Monzo or N26, even if they also have very good results, they are not at the same level by capitalization, by investment appetite, and so on?
It's really a good question. And my personal opinion, it's always about the perception of the C-level, like how you see the context in which you operate and how do you see the next steps. And the biggest challenge for UK banks, it was the Brexit, because Brexit definitely broke a lot of strategies which were kind of outlined. The money was planned. VCs were looking for getting the results from the companies. And when the Brexit hit it hard, the UK neobanks, I think the difference was between I'm focusing on the local market, like Starling did. They were first to the market. They had really strong positions, but they chose not to pursue other markets. So basically, in a nutshell, I would say that operating UK only, they providing like digital services, banking as a service, but from consumer base, like you cannot open Starling account being from Poland or Germany. So I think the difference between Monzo, Starling, and Revolut, that Revolut by nature, because the initial pitch book was given an ability to use Revolut as a travel tool. And actually they perceived and understood that's a model and moment to go global. That's why they acquired the license in European Union. That's why they're actively seeking to, even right now, to buy a bank in the United States. And they active in many regions. They experimented with the models as wallets in Singapore. So I think it's about perception. Are you the startup of the closed or the castles or the open roads? So choosing between staying locally as a closed castle, that's one way. But if you're choosing the society of the open roads, where you can fully travel, where you can spend money, nowhere where you are, it doesn't matter where you are. I think it's a central difference, which gave a really boost to global expansion to Revolut compared to Monzo or Starling.
You're absolutely right. And you touched that topic. Europe is inclusive. It's an inclusive region. It's a region where people from different regions, countries, speaking different languages, they can interact easy between us. We can, take and travel from one city to another in 2 hours or 3 hours and be in total another different part of European Union. And Revolut provided, in my opinion, they provided that tool that helps you to have a multi-currency account, one single account in different currencies. Sometimes it's very easy to manage, for example, in travel, when you travel to, Sweden, for example. Yes, you have all the savings, everything is in euro. You can just switch everything to Krona and use local currency for better managing your budget or wherever. Plus, the Revolut puts everything, the accent on super app with footprint, a global footprint. This is, I think, as you mentioned, this is why they chose, because of strategy, they chose this. This is what happened. And they took the logic of inclusion. By the way, about the inclusion, I will recommend the book later. The inclusion that they provided for the customers is absolutely great. And they, as you said, they offer the possibility to, interact with Revolut, with their product from different countries.
Maybe to come back more with what we see in 2025. By the reports, I think we see the break and the change of the trend. Because if you take a look back in 2024 or previous, like post-COVID times, the most investments and the most focus is on the consumer-based side, like the companies who are providing B2C services or payments. They lead in the market. Like the most investments, if you take a look on the reports, they get in the biggest round, they get in the biggest valuation. But in 2025, the first part of the year showed that there is a huge appetite for different like investments and even IPOs, because we saw Circle go into IPO this year. Does it mean that we see the change of the market and perception from VC, what they think is valuable for putting their money and gaining the margins and revenues? Like, is this a post-world for B2C model?
No, but sure, it's not a post model for B2C model. But the idea is, so I think my opinion, we are facing. So we entered a new era in fintech. Of course, a era that will include using of cryptocurrency or cryptocurrency that will be backed by national banks or European Central Bank. Who knows? Who knows? We know that this will happen, but sure, the question is about when it will happen. The inclusion that I mentioned earlier, and the possibility to generate super apps that will put everything under one hub, all kind of services, B2B, B2C services, that will be, in my opinion, will be the trend for fintech for at least till the end of 25, even for next years. This is, by the way, happening not only in fintech. Aggregation of information is a trend right now. We are facing right now with total decentralization of information and content. That centralization is a must on the market. And this, as I mentioned, this is not happening only in fintech. In fintech, Revolut proves this. If you have an application where you can use USD, Euro, USDC, USDT, okay, USDT less, but Bitcoin, and if it will be a possibility to pay with Bitcoins using a Revolut card or a Monzo card or N26, plus purchase shares, trade with ETFs. This is the application. This is the product that will type of product that will be in the top of searches in App Store or in Play Market. This is where investors will go. Second, what investors will take a look is not only the simple dynamic but also profitability. We, by sure, are not anymore in the period where a company will be interesting for investors, even if it's not profitable for a long period of time. Of course, the startup will not be profitable from the first day, but already an established company for years, it has to be profitable. And this on what the investors are looking already for several years. So, for example, even for us, for example, our audience, for example, if you are a CEO or a COO or owner of a company, we are looking very much on the profitability. We are looking very much to have not to go just in zero or to go in minus because we can. No, it's not a trend anymore. We can do this only in case of big investments or in case of need or strategic decisions. But this is done with a lot of pain. So this is where the investors will look like. Maybe you have another opinion on this, Igor.
I think that's true, because right now you will get the attention from VCs if you have not just the business idea, but proven business model and some traction with the revenue from existing customers. That's makes maybe the market more following the trends. And in this case, like I would like to drop the case of the Circle. I don't think it was possible 3 or 5 years ago, the companies like a Circle to go to IPO and be so successful, because their evaluation is pretty neat and they raised around 1 billion, but the primary offering, and it's a huge one. And that's basically the company who's providing the digital assets, digital currencies and cryptocurrencies before, but we haven't seen this merge and hybrid model when the actually by providing the fiat tools through the crypto is driving the interest from the market. So do you think that's a sign that till the end of the year, we will see more interest in trendy stuff like stablecoins, off-ramps, on-ramps infrastructure, the AI and the fintechs?
Would you, as a owner of a company or investor, will invest in AI, Igor? Because I will.
That's yes. And the borderline for me is the business model. As we said, if you have a good understanding what you are doing, not just following the PowerPoint and saying that everything is AI. Because in my experience, we've seen a lot of clients who are saying, yeah, our product is baked by AI. We do really good job with the model and et cetera, et cetera. And then you're just finding a bunch of Python scripts just doing the algorithmic work. So in this case, I would say AI is something that just ramping up. Basically, it's data science and data modeling. So there is no artificial intelligence yet. What we see is statistics model, which can be really good with the natural language processing, with the image processing, with understanding what it sees from the statistics standpoint, not just algorithmic standpoint. And it's a huge, huge implementation area of these models.
I would invest in agentic AI. This is one of a trend which was different studies of like KPMG or other companies shows that started a very interesting trend. So even companies like WorldPay were I know that I heard that even Stripe or Revolut are also preparing for this, I don't know the level of preparation, but exists already talks on the market. Fintech world is preparing for agentic e-commerce. It means like, imagine that you say to your, AI agent, hey, find me the cheapest ticket to, Stockholm or Madrid. Currently, after such a kind of a prompt, you'll receive, hey, here are the cheapest options for flights to Stockholm or Madrid. Imagine that the response will be, hey, I just found a ticket. I purchased the ticket. Here they are. You have a flight like tomorrow or in a week or wherever. So the behavior of a purchase made by a physical identity by a person is totally different than the behavior of AI. You cannot use classical marketing tools for make the person purchase a ticket. So you have to work with differently. Plus, you have to give the possibility to AI to make the purchase in the name of that person, because currently purchasing of a ticket or wherever, you have to do by your own. You have to make verification. You have to pay from your bank account or your card or accept the payment in your 3DS Secure, whatever. But the forecast is that this will just blow up and the growth will be from $136 billion in what is already right now this market to something like 1.7 tera million of dollars somewhere in 2030. So in 5 years, we will have a boost of agentic e-commerce or AI e-commerce. Merchants have to adapt to this. Banks have to adapt to this. Regulations. Well, regulations will be a question if they will, how they will react. We don't know, but something will happen. It's requesting a new UX, a new adaptation from the industry, a new UX, a new approach for mechanisms and so on. This is absolutely great steps. Are you afraid, by the way, Igor, that your AI agent will start at one moment to purchase milk for your fridge? I know this idea of purchasing milk in your fridge is not a new one, but
maybe I will reference to the economic studies. And until the late 90s, the economic study, they were literally based on the rationality of the people. Like the best business model or the best decision is the best rational decision. But what Kahneman changed is that we understood that people are not rational. And when we think that people will give out the control to agentic AI to make decisions, I don't think that we will see it in near future. I'm the person who were involved in web engineering from, early 2000. And I was the latest person to trust the internet tools to do something on my behalf. Like I'm usually checking myself a lot of stuff. And I was really late to maybe even to the online payments because it's kind of different. If you know how it works, then you might not give it a lot of authority and you will not delegate the control. So I think what we will see, it's not a technical ability for AI and agentic tools to act on your behalf, but how humanity will react on that. Because what are the boundaries? Do we have, the LAM robotics law that the agentic AI cannot hurt the person? No, we don't have any rules. We have private companies controlling your natural language processing, the way how perceiving your comments, and you don't have any control to make sure that it will not harm you in a financial way, because I think that is going to be the biggest challenge. So I would not focus, can it buy the tickets for me? But I would focus, what is the balance between what I trust, what I don't, and what is my control and authority over the computers and kind of robots. But we are not in agentic world yet, so we don't have AI. That's another maybe breach back to the topics. Like this year, I've attended Stripe sessions in San Francisco, where the Zuckerberg were giving the lecture, and the Stripe did really astonishing presentation with the wipe coding, where everything failed with the command, so it didn't work the way that it's supposed to, with the cursor, which once again showed that even coding is not in this state. But what I saw on the Stripe, that actually there is a lot of focus in stable coins. The integration of the breach of into the Stripe has finished, and I would shift a little bit into the stable coins, because you mentioned that USDC is not so used, but Chime was going to, or not the Chime, the Circle went to IPO with USDC minting basically. So if we put aside AI, is the stablecoin as new business model, which is finally merging the fiat with the crypto world? Because we see that Bitcoins, NFTs are not as much trendy as it used to be. With NFT, it's already the history. And is stablecoins is something that will add the value and will fill the missing gap between the real-time or non-existent real-time cross-border payments, because Swift is kind of useless, then Wise is trendy, but it's not serving all the markets. And it seems that stablecoin might be this case where you finally be able to do the real-time transfers across the globe by utilizing this merge between fiat and cryptocurrency. And we see that there is a lot of investment in that. But I think VCs are thinking about the stablecoins.
So two aspects here. First is, let's see the trends of the market. We have our weekly harvest review, where we are talking for the last 3 months about, every week we are talking about some acquisitions in crypto world, where acquisition made by challengers, banks, or whatever. So for example, Stripe acquired, Praxis acquired Bridge, which is a big sign of transition to crypto fiat synergy in one single place. Remember the topic I mentioned at the beginning with super app. So it's proves once again that the inclusion of two different type of payment methods or payment instruments can be, a very good solution. But investments, the trend is very dynamic, but investments are not so big in comparison with the last years. The growth are not so big as was expected. This year, 2025, till today, the investments in crypto assets, in digital assets, in symbiosis between crypto and fiat was around 9.1 billion. Last year, it was 8.5, 8.7 billion. It's a slight increase, but it shows a positive trend, but it's not a big, it doesn't show that this is the main accent is on this. Second is cybersecurity. Cybersec is something we need when we're thinking about crypto assets, when we think about building super apps, about developing fintech products. And unfortunately, cybersec investments are also not so big one as was expected. Usually, fintech markets provide, after the investments in fintech arrive investments in cybersec. It didn't start it yet. When we will start to, and it's linked also to AI. So when we will start to see a big increase in the market of cybersec, it means that right now the age already started to be in production, where you see all this kind of a symbiosis. So digital assets by sure is the future, because United States approved the president of the States approved some interesting regulations and new laws allowing using crypto assets and digital assets in different things. BIC appeared in the European Union, and it's a very good sign, but I think there will be a big symbiosis between digital assets, cybersec, and agentic AI. Yes, we are not now in the world of agentic AI. Maybe it will not be in 2030, maybe in 2035, but by sure we go there. It's 100% we go there. So once again, the topic is inclusion, symbiosis. And by the way, here European Union is very well, we are good in this, in building symbiosis and integrations and synergies between things that cannot work together or cannot live together. We did this with European Union as a structure, where people from different countries that 70, 80 years ago were fighting in one big world, one big war. Today they are friends and they cooperate.
one of the aspects of the cybersecurity which I think is affecting nowadays, basically cloud infrastructure is de facto the standard. And if we compare to 5 years ago, a lot of regulators were really skeptical about cloud infrastructure for fintechs and banks. And nowadays, if you go to any conference, there are a lot of speakers, keynote, how they migrated to the cloud and how it was beneficial. Yes, sometimes it might cost you more than it used to be on the premise, but then you have the flexibility with the resources and security. Because if you're using the tools which were ironed out by millions of users, like take a look on the Netflix, one of the biggest customer of AWS, and it proves that it can solve all the performance issues, it can function and deliver whatever it's need for the customers. I think it shows that cybersecurity in terms of the infrastructure is kind of shifted from on-premise and deep level required field to more agentic AI. Hey, ChatGPT or I don't know, Gemini, I need to create a Terraform to deploy my Kubernetes cluster to AWS, which is kind of different. So maybe that's the reason why we see less, but let's see what it will progress. Another thing which I would like to highlight, that's a segment for the payments, because last year in 2024, the total investment were around 30 billions, 0.8 billions. And so far, what we see until the end of the June is pretty small number. It's 4.6 billion. So it's like almost 5 times or even 6 times less in half a year compared to the previous year. And a few names that you might know and heard about is actually the Airwallex, which from Singapore, which raised astonishing 300 millions in largest payment deal in ASPAC region. And I think that's once again shows the trend. So the digital currencies are growing, the cybersec is falling a little bit behind, and the payments, they're different. So that kind of shows the current pulse, what we're facing. And what you would recommend as the maybe final words to our listeners, as a CEO or C-level, what do you think, Dimitro, is the trend or the things that you need to keep in mind, which is not trendy, but you still need to keep attention on it?
I think, first of all, if you're a CEO or owner of a fintech company or close to fintech, first of all, you have to pick up the phone or email and contact us, because we do not trade our secrets so easy. It was a partial joke, but to be honest, I think I'm a fan of data-driven decisions. Take the data. If you have a feeling that something is going on a specific niche or market, look at this niche, take the data, analyze, and with 0.5% of belief that this can be a good opportunity or a good step, and 99.5% of analytics, do this decision and take a decision and invest or change, the way you're working. This will be my honestly simplest advice, because the niches are so many that we need, we have to make all the decisions based on analytics.
And my answer, I think, would be compliance. So we're kind of exchanging the hats here. You're talking about the technology and I'm talking about the compliance. So in this case, I would say my answer is that you need to make sure that your compliance business process is up to all the standards by the regulator, and even a little bit more, because in this case, we saw this year a lot of attention from the regulators. We have the cases when something was approved by regulator before and it was functioning as a business model for years. And then with the updates, regulator came and said, okay, that's not good enough. You need to update. So you cannot miss the compliance part, because it becomes more than essential. The world is becoming much more global. You can register in digital application by VPN, by utilizing the SMS services. And I cannot stress more that your platforms, your digital products should be in 100% compliance with the regulations, but also really good in overviewing what is your risk appetite and what you're doing on the customer side. That's kind of the trend that is happening with the pushback a little bit happening with the neobanks, because regulators come after. We see huge delay, I would say, with the Revolut from PRA for providing the full banking license, despite it's been a year. And it might be to the reason that certain neobanks are taking more risks they compared to traditional bank are happening. So compliance, that's my answer.
I totally agree with you, but compliance is a part of those data you have to analyze. So for me, it's like inclusive.
That's true.
And if you were speaking about inclusiveness, about inclusivity, I think came right the time to say thank you to all our listeners that they took their time and listened, watched us. But before saying goodbye, because I was speaking so much about inclusivity, I would like to recommend your book to all of you. It's a book that I honestly think it can generate new ideas and help you to find new ideas, identify possibilities. It's called the book is called Digital Finance Innovations for Inclusion. This book was written in 2023. The author is David Mlanga. The book was written in 2023. It's absolutely great book where you can put special emphasis on financial inclusion, specifically financial inclusion, will help you to generate bigger amounts, bigger volumes, bigger profits. So it's absolutely great book. Do you have any kind of book in your pocket that you would like to recommend, Igor?
Today, we talked a lot about the banks, and my book will be Brad King Banking 4.0, Banking Everywhere, Never at the Bank. And that's kind of true because the book has been released in 2018. Over the 7 years, we see that you don't think to go to the branch to dispatch the cross-border payment or do anything, even the KYC and onboarding to the bank. So you're just switching on your phone, you're just doing the liveness check, scanning your documents, and here we are, you have an account. So that's a really good book to reflect how the world has changed for 7 years, even after the releasing of this book. So I really recommend to read it, and it gives really good historical precedents and what is the fight between traditional banks and the new banks.
That's it for today. Thank you very much to all of you. Igor, thank you very much for all the effort for preparing today's podcast. Just opening a little breaks. We did a researching job for preparing for today's podcast. So for us, it's very important when we see reactions on YouTube or on TikTok or any other platform, LinkedIn. So please comment, tell us if you found the topic interesting or not. If you think we have to do more or not, maybe we need to shut up and don't share our experience anymore. Who knows? So please share your thoughts about our episode, about Fintech Garden, with our project, because the main goal of our project is to build inclusivity, to build communities of fintech lovers, of people who think that fintech is the future, people who are working in fintech, those who invest in fintech. Have a nice week to all of you. See you soon and stay in touch.
Thank you, guys. Thank you for listening, and looking forward to see you on the next episode in 2 weeks. Have a great day.